Hi everyone, and welcome back to Save with Jarod. I'm Jarod, and today we're going to be talking about your credit score and how to improve that. So, let's get into it. A credit score is something that a lot of us have heard about, but few really understand. It's this mythical figure decided by massive lending institutions and how they rate our ability to apply for credit. Not having a good credit score massively affects your ability to borrow for things such as home loans, vehicle financing, and even personal loans and credit cards. A credit score lets a finance house know how responsible you are at repaying your debt. Remember, your credit score and affordability are two different things. You can have a great credit score and still not qualify on a loan based on a lack of affordability. So, how do we improve our credit score? Well, first we have to understand what a good credit score is. Now, in South Africa, credit scores range from 400 to 800. It's completely dependent on the company itself. A credit score of 400 at one company is the same at 800 at another. There are many different companies that assess credit. The major ones that are used in South Africa are Experian, TransUnion, and XDS. To give you an idea, a good credit score is around 600 plus. A really good score, depending on the institution, is 650 or more. Now, here's the issue. How do we get a credit score up to those points without actually knowing how it works? Over the years, I've spent a lot of time analyzing credit scores, reading many finance articles, and chatting to a number of people who work in finance institutions. And these are the things that I've discovered. I personally managed to get my credit score over 650 within a year. Here's a few tips that I've come up with that are widely known across the industry. Tip number 1, keep your credit limits under 50%. So, the first thing is that once you either have a credit card or personal loan is to make sure at all times you have your balance at no more than 50%. So, for example, if you have a credit card that has a 20,000 Rand limit at all times, you must try and keep your balance at no more than 10,000 Rand. I know many people say that 30 to 35%, but I feel closer to 50 is the best option. Now, I understand that this is easier said than done, but through testing of my own, I've literally seen my credit score jump up by as much as 8 points in 1 month. By just making sure my balance is over 50%. You have to make a conscious effort to keep your spending in check. Now, I know that there's a lot of credit cards out there that have some great benefits that encourage you to spend. If you do use those benefits a lot, make sure that as soon as you use those benefits and use that money, you put that back into your credit card as soon as possible. Now, this applies to all forms of credit, whether it be clothing accounts, credit cards, personal loans, etc. So keep in mind your shopping accounts from all companies also are affected by this. Tip number 2, never miss a payment. Now, this seems something really obvious, but this is something that is very important when determining your credit score. Finance houses will definitely look at whether you have missed payments. One single missed debit can put your credit score back by almost 6 months. Now, this is specifically applied at banks. If they see that you have either a stop payment or have a missed debit, they can actually decline your financing until you've had no stop orders or missed debits for 6 consecutive months. This can really slow down your goals of either your home that you want to buy or the car that you want to drive. If a debit goes off your account incorrectly, and this happens frequently when changing over insurance or things like that to different companies, rather reverse the transaction on either your banking app or go into the bank. Rather sort this out with the company itself than actually putting a stop payment on your debit order. If you phone your bank, they will tell you exactly which company has debited off your account, give you a reference number, and often provide you with the contact details for the company. Now, this is something that a lot of banks will not tell you, but it is what is used on their systems for measuring your affordability and interest rate. Your interest rate is determined this way. I'm sure you've heard of prime plus 1 or prime minus 1. This simply means that you are either 1% over the normal lending rate or 1% under the normal lending rate. The better your score is, the lower your interest rate will be. Tip number 3, avoid utilizing your whole limit. So when I say avoid utilizing your whole limit, what I mean is generally when you go to the bank or check on your online banking, it will tell you and give you already a predetermined amount on what they feel that you qualify for. So you'll often see that we have a pre-qualified credit card limit for about 25,000 Rand. In that instance, if you do need a credit card, and a credit card is a very valuable thing to have for emergency purposes, I would suggest at rather going for around the 15,000 Rand mark for a credit card. This way, you're not utilizing your full limit and ensuring that you do not have too much debt. The same goes for all your other accounts like shopping accounts, clothing accounts, and personal loans, etc. Always keep below your budget when it comes to taking out items on finance or when applying for a line of credit. If you have to max out your credit card and max out your credit limit on it, you definitely can't afford it. Rather save up for a few months and put a deposit on it, which will reduce the financing costs. Remember, the more you put down upfront on an item that you are financing, the more likely it will be that banks are likely to reduce your interest rate. Tip number 4, get a credit card. Now, this is my last tip. If you don't have a credit card, go out and get one. I know that this seems surprising, but if you have no credit track record of how you've been paying off accounts before, this will actually give you a low starting credit score and a very high interest rate. A credit score is basically a measure of showing a finance house how responsible you are with paying off your debt. If you do not have anything on your name, you are essentially an unknown entity in their eyes. So get a low limit credit card at well less than what your approved limit is. Buy a small item on it and pay that item off within a week. This might seem insignificant, but I can assure you it will really help boost your credit score. Now, only use this method if you have absolutely no lines of credit open at all. So if you've recently just got a job for the first time or starting out in the working world, this is a really simple method for you. So with all these things in mind, I think you'll be able to either rapidly improve your credit score and also reduce your interest rates on your existing credit card facilities, which will help you save more money. All the money that you save you can put into investing and growing your wealth. Thanks so much for watching, and I really hope that this has added some value to your life in some way. Share this with as many people as you like, if you feel that it can help them. And if this has helped you personally, consider subscribing to see more videos like this. Hit that like button if you haven't already, and remember, keep saving.